Welcome to the second episode of Business Insights, a format designed to give investors an overview of public-listed companies. Our hosts Envy and Fred talk about Nvidia and give a detailed analysis of the business model, the industry, financials, as well as opportunities and risks. Let's jump into it.
All right, welcome everyone. Today we're doing a deep dive into a company you might have heard of, Nvidia.
Oh, yeah, they're kind of a big deal, especially if you're interested in, well, almost anything tech these days.
Right, they're everywhere. Gaming, AI, data centers, even self-driving cars. It's incredible how they've evolved.
It really is, and that's what makes them so fascinating, particularly for potential investors like yourself. They've shown remarkable adaptability, which is a huge plus in the tech world. You know, things change so quickly, and they've managed to not only keep up, but often stay ahead of the curve.
That's a good point. Adaptability equals survival and maybe even thriving in this industry.
Exactly. They've got this knack for seeing where technology is headed and positioning themselves to be at the forefront. It's like they have this internal crystal ball.
Well, maybe not a crystal ball, but they certainly have a deep understanding of the potential of their technology. I mean, they started as a graphics card company, primarily for gaming, right?
Yeah, that was their bread and butter for a long time. They were the go-to for gamers who wanted the best performance.
But then they saw how their GPU architecture, which was originally designed for graphics, could be applied to so much more. It's like they unlocked this hidden potential.
It's like they discovered this secret weapon, and they didn't hesitate to leverage it. They recognized the growing importance of AI, high-performance computing, even self-driving cars, and they realized, hey, our GPUs can be a game changer in these areas.
And they were right. They really were ahead of the curve. So for a potential investor, this evolution is definitely something to consider. It shows they're not afraid to pivot and seize new opportunities, which is critical in the tech world.
Speaking of pivoting and new opportunities, they've got two main business segments now, right? GPU and Tegra processor.
That's correct. And through those segments, they address four key markets: gaming, professional visualization, data centers, and automotive.
So they're not putting all their eggs in one basket, which is usually a good sign for investors. Diversification is a smart strategy.
Exactly. It helps to cushion the blow if one market hits a rough patch. It's all about spreading the risk and aiming for long-term sustainable growth. Makes sense. So they've got this impressive track record of evolution and diversification. Let's dig into the specifics of their business model. They've gone beyond just selling chips, right? Platforms and complete systems are a big part of their offerings now, too.
You got it. And that shift is really important. It broadens their appeal and their customer base. Not everyone just needs a chip. Some need the whole package, the hardware, the software, the works. And Nvidia can provide that now. They've become a one-stop shop for a wider range of customers.
I see. It's like they've transitioned from being a component supplier to being a solutions provider.
Exactly. And that makes them more attractive to a broader range of investors as well. They're not just dependent on the ups and downs of the chip market anymore. They've got a more diversified revenue stream.
Interesting. So their business model has evolved alongside their technology. It's like they've been strategically building this ecosystem around their core competencies. But speaking of strategic moves, we can't overlook their acquisition of Mellanox Technologies back in 2019. That was a pretty big deal, wasn't it?
Oh yeah, a $6.9 billion deal. That's not chump change. It really signaled their ambition and their commitment to becoming a major player in the data center market.
I remember that acquisition making headlines. Mellanox was a big name in high-performance networking, and it seemed like a really strategic fit for Nvidia.
It definitely was. Mellanox had this deep expertise in connecting servers and data storage, which is essential for data centers, especially those focused on AI and high-performance computing.
It's like they were adding this missing piece to their puzzle, solidifying their position in a market that's absolutely critical for the future of technology.
Right. They were essentially saying, hey, we're not just about graphics anymore. We're serious about data centers, and we're willing to invest big to be a leader in this space.
So it seems like they've really been playing the long game, thinking strategically about their future and making bold moves to achieve their goals. But I recall there were some hurdles with that acquisition, weren't there? Regulatory approvals and things like that.
Yeah, there were a few bumps in the road. It's pretty common with large acquisitions, especially in the tech world. Multiple countries had to give their approval before the deal could be finalized.
It's like navigating an international obstacle course.
Kind of. But it's something investors should be aware of. These regulatory hurdles can sometimes cause delays and uncertainty, but in this case, Everything got sorted out, and the deal officially closed in early 2020.
Okay, so they cleared those hurdles, and Mellanox became part of the Nvidia family. Now let's shift gears and talk numbers. From what I've seen, Nvidia's financial performance has been pretty stellar. Their revenue has been climbing steadily, and their net income has been soaring.
Their financial performance has been impressive. Their revenue more than doubled between 2016 and 2020, which is pretty remarkable.
Those are the kinds of numbers that make investors' ears perk up.
Definitely. It suggests they're effectively tapping into some of the fastest growing sectors in tech, particularly AI and data centers. Their consistent growth is a strong indicator of their market position and their ability to execute on their strategy.
So all signs point to a healthy financial picture. But what does that mean for someone thinking about investing in Nvidia?
It's a good sign, but it's only one piece of the puzzle. We need to consider their investments too. They've been pouring a substantial amount of money into research and development. That's a signal they're committed to innovation, which is absolutely essential in the fast-paced world of tech.
That makes perfect sense. They need to stay ahead of the curve, constantly pushing the boundaries of what's possible.
Exactly. And their R&D investments suggest they're doing just that. They're not resting on their laurels. They're actively pursuing new technologies and advancements.
So that's something to keep in mind for potential investors. They're not just riding the current wave, they're investing in the future.
Precisely. And that's something we should delve deeper into. But before we get too carried away with the positives, let's talk about the potential downsides. Every investment comes with risks, and Nvidia is no exception.
Right, let's address the elephant in the room. What are some of the risks associated with investing in Nvidia?
One of the biggest risks is the intense competition they face. The tech world is a battleground, and Nvidia is constantly fending off rivals. We've talked about Intel and AMD, but there are other players too, including large internet companies that are starting to develop their own chips in-house.
So how does this fierce competition impact Nvidia? Could it hurt their profitability or market share?
Absolutely. These competitors are hungry for a piece of the pie, and they're not afraid to undercut prices or develop innovative new products to gain an edge. Nvidia needs to constantly innovate and stay ahead of the curve to maintain its leadership position.
It's like a high-stakes game of chess. One wrong move and they could be in trouble.
Exactly. And here's another potential risk that we've identified. Nvidia's reliance on third-party manufacturers for production. They don't actually make their own chips. They contract with other companies to do it for them.
So they're dependent on others for a critical part of their business.
Precisely. And that creates a certain level of vulnerability. Think about it. They're at the mercy of these manufacturers when it comes to things like production delays, component shortages, even quality control issues. Any hiccups in the manufacturing process can directly impact Nvidia's bottom line.
So even with their strong financial performance and impressive growth, there are things to be cautious about. It's a bit of a balancing act, isn't it? Weighing the potential rewards against the potential risks.
It always is with investments. There's no such thing as a sure thing. But understanding the potential downsides is just as important as recognizing the potential upsides. It helps you make a more informed decision.
Great point. So we've got this impressive company with a history of innovation, strong financials, a knack for spotting opportunities, but also facing some serious competition and potential supply chain vulnerabilities. It's a lot to take in.
It is, and we've only just scratched the surface.
All right, let's shift gears a bit and talk about something that's increasingly important for investors: corporate governance. How transparent is Nvidia? Do they have strong practices in place?
From the information we've gathered, they seem to be committed to strong corporate governance and transparency. They've got a thorough financial reporting process, an independent board of directors, and a comprehensive code of conduct for their employees.
So they're ticking all the right boxes when it comes to ethical conduct and responsible business practices.
They seem to be, and these factors are becoming more and more important for investors.
Why is that? Why are investors paying more attention to corporate governance these days?
Well, because good corporate governance can mitigate risk and contribute to long-term sustainability. It shows that a company is well managed and accountable, which can boost investor confidence.
That makes sense. Investors want to know that their money is being managed responsibly and ethically.
Exactly. And it seems like Nvidia understands that. They've made a conscious effort to be transparent and accountable.
All right, so to recap, we've talked about Nvidia's impressive evolution, their diverse business segments, their strong financial performance, and their commitment to corporate governance.
We've highlighted both the exciting opportunities and the potential risks they face.
It's a complex picture with both pros and cons. But let's delve a bit deeper into those risks. I'm particularly interested in the competitive landscape.
Good idea. Let's break it down a bit further. We've mentioned Intel and AMD, but the threat from those large internet companies developing their own chips is worth a closer look.
Absolutely. How much of a threat do they pose? There's such behemoths with seemingly limitless resources.
It's a significant threat, to be honest. They have deep pockets and a lot of technical expertise, and they're motivated to develop chips that outperform or are more cost-effective than what Nvidia offers.
So they could potentially cut into Nvidia's market share, especially in the data center market.
That's the concern. If these internet giants can create chips that meet their specific needs, they might become less reliant on Nvidia.
It's like a David and Goliath situation, except in this case, David has multiple Goliaths to contend with. And then there's the issue of Nvidia relying on those third-party manufacturers for production. What are the specific concerns there?
It comes down to control, or a lack thereof. Nvidia has to trust these manufacturers to deliver on time, to meet quality standards, and to have enough capacity to meet demand. Any disruptions in their operations, whether it's a natural disaster, a labor dispute, or something else, could have a ripple effect on Nvidia.
So even though those global events might seem unpredictable, the potential for disruption is always lurking in the background.
Exactly. And then there are the geopolitical tensions we hear about in the news. Those can also impact global supply chains and create uncertainty for companies like Nvidia.
So while Nvidia is undoubtedly a powerhouse in the tech world, it's not invincible. Investors need to be aware of these potential vulnerabilities.
Absolutely. It's all about balancing the potential for great returns with the understanding that risks are always present.
Now, before we move on, let's take a step back and summarize what we've learned so far.
We've seen how Nvidia has transformed from a primarily gaming-focused company into a major player in AI, high-performance computing, and other key markets. Their financials look good, but they do face stiff competition and potential supply chain vulnerabilities.
And let's not forget their commitment to corporate governance, which is a plus for investors.
Right. They seem to be taking the right steps to ensure ethical and responsible business practices.
All right, that's a great overview. And I think it's time to dig into some more specifics about their financial performance.
Sounds good. Let's take a look at those impressive numbers in more detail.
Specifically, I'm curious about their revenue growth over the years. What kind of trajectory are we looking at, and what drove those impressive figures?
Well, their revenue has been on a steady climb. To give you an idea, in 2018, their revenue was $9.7 billion. Just 4 years later, in 2022, that figure had jumped to a whopping $26.9 billion.
Wow, that's a remarkable increase. But what exactly fueled that growth? Was it primarily driven by one particular market or product?
It's been a combination of factors. Their gaming segment has continued to be a major revenue driver, but their data center business has also seen explosive growth.
And I imagine that's thanks, in large part, to the increasing demand for AI computing power.
You got it. Their data center business is booming, and it looks like this trend is only going to continue.
So it sounds like they've successfully tapped into some of the fastest growing sectors in the tech industry.
They have, but it's important to remember that past performance doesn't guarantee future results. The tech industry is notoriously unpredictable, and Nvidia is not immune to market fluctuations or shifts in demand.
That's a good point. So while their recent financial performance is impressive, investors shouldn't get too carried away.
Exactly. We need to analyze their revenue streams further and understand where their money is coming from.
All right, let's do that. We know they have two main business segments, GPU and Tegra processor. How does their revenue break down between those two?
The GPU segment is by far the larger of the two. That's where they generate the majority of their revenue. Think of it this way. This segment includes their GeForce graphics cards for gaming, their Quadro graphics cards for professional visualization, and their Tesla GPUs, which are specifically designed for data centers and high-performance computing.
So they've got a range of GPU products targeting different markets.
They do, and it's a strategy that's been working well for them.
And what about the Tegra processor segment? What kinds of products fall under that umbrella?
The Tegra processor segment is all about their system-on-a-chip products. You might hear them referred to as SOSACs. Essentially, they're complete computer systems packed onto a single chip. They're used in all sorts of applications, mobile devices, automotive systems, even robots.
So it's a more specialized segment, but it still has a lot of potential.
Definitely. It's an area where they're continuing to innovate and develop new applications.
Okay, so we've got a general understanding of their two main business segments. Now let's break it down even further and look at how their revenue is distributed across their four key markets.
We've got gaming, professional visualization, data centers, and automotive.
Sounds like a good plan. Starting with gaming, this has been NVIDIA's bread and butter for many years, hasn't it?
Oh, absolutely. Their GeForce GPUs are practically legendary among PC gamers. They've consistently delivered top-notch performance and have a reputation for pushing the boundaries of what's possible in gaming graphics.
I can definitely vouch for that. As a gamer myself, I've always been impressed by the quality of their graphics cards. They really enhance the gaming experience.
They do. And their dominance in this market shows no signs of slowing down. They're constantly innovating and releasing new generations of graphics cards that push the envelope even further.
So they're keeping the gamers happy. Now, what about the professional visualization market? What's that all about?
Professional visualization is all about those demanding applications used by creative professionals, engineers, and designers. Think computer-aided design, 3D modeling, video editing, and things like that.
Ah, so it's about creating stunning visuals and realistic simulations.
Exactly. And NVIDIA's Quadro GPUs are specifically designed for these demanding workloads. They offer exceptional performance, reliability, and features that cater to the needs of professionals in these fields.
So they're not just about gaming, they're also empowering professionals to create and innovate.
That's right. And this market segment, while smaller than gaming, is still a significant revenue generator for NVIDIA, and it's expected to grow as these industries become even more reliant on sophisticated visualization tools.
Okay, on to the next market, data centers. I know this has become a major focus for NVIDIA in recent years.
It has. The data center market has been a huge growth engine for NVIDIA, and it's all thanks to the increasing demand for AI computing power and cloud services.
It makes sense. AI requires massive amounts of processing power, and NVIDIA's Tesla GPUs are designed specifically to handle those workloads.
Exactly. And their dominance in this market is clear. Their Tesla GPUs are found in many of the world's most powerful supercomputers and are used extensively for AI training, scientific research, and all sorts of other data-intensive applications.
It seems like they've positioned themselves well in this market.
They have. They saw the potential of AI early on and made strategic moves to become a leader in this space.
And finally, we have the automotive market. This is a relatively new area for NVIDIA, isn't it?
It is. It's a bit of a frontier for them, but it's one with enormous potential. We're talking about self-driving cars, advanced driver assistance systems, and all the technology that goes into making vehicles smarter and safer.
It's like something out of a science fiction movie.
Kind of. And NVIDIA is right in the thick of it with their D-Drive platform, which is a suite of hardware and software specifically designed for autonomous driving.
So they're not just making chips for gaming PCs anymore. They're also playing a role in shaping the future of transportation.
They are. It's an exciting area and one that investors should keep an eye on.
It definitely sounds like it. So looking at their financial performance across these different markets, it's clear that they've been executing well on their strategy.
They have. Their diversification has paid off, and their focus on high-growth markets like AI and data centers has fueled their impressive revenue growth.
But as we've discussed, investors need to be aware of the potential risks associated with competition, supply chain vulnerabilities, and the cyclical nature of the semiconductor industry.
Right. It's important to maintain a balanced perspective and consider all angles before making any investment decisions. But now I think it's time to shift gears once more and talk about another crucial aspect of NVIDIA's business, their research and development efforts.
Yes. Let's talk about their innovation engine. From what I've gathered, they're known for pushing the boundaries of what's possible in graphics processing, AI, and other key technologies.
You're absolutely right. They've been a driving force behind many of the advancements we see in the tech world today. They're not afraid to invest heavily in R&D, and it's evident in the cutting-edge products and platforms they've brought to market.
So they're not just resting on their laurels, they're actively pushing the boundaries. What are some of their key R&D initiatives? What are they focusing on right now?
One major area of focus, which should come as no surprise, is AI. They're developing new hardware and software platforms specifically designed to handle the ever-growing demands of AI workloads.
So they're doubling down on AI, which seems like a smart move given its rapid growth.
It is. They're also investing heavily in the development of new AI algorithms and applications, things like natural language processing, computer vision, and robotics.
So they're not just making the tools, they're also exploring how AI can be used to solve real-world problems. That's impressive.
It is. And it's not just about AI. They're also exploring the metaverse, which is a whole other world of
A
possibilities.
metaverse. Now, that's a concept that's really captured the public's imagination.
It has. And Nvidia sees it as the next evolution of the internet, a persistent, shared 3D virtual world where people can interact with each other and with digital objects in ways that were previously unimaginable.
It's a vision that requires a lot of technological firepower to become a reality. What are they doing to make it happen?
Well, they're developing a suite of technologies to enable the metaverse, including their Omniverse platform.
Omniverse. That name sounds familiar. What is it exactly?
Think of it as a virtual world where designers, engineers, artists, and other creative professionals can come together to collaborate and create. It's a platform for 3D design, simulation, and visualization. And it's already being used by some big names in industries like manufacturing and entertainment.
So it's not just a concept. They're actually building the tools to make it a reality.
They are, and they're making progress.
It sounds incredibly complex and challenging, but also very exciting.
It is. But beyond AI and the metaverse, there are other areas where they're focusing their R&D efforts. Quantum computing, for example, is an area they're keeping a close eye on.
Quantum computing. That's next-level futuristic. Can you explain it in simple terms?
It's a completely different way of computing that harnesses the principles of quantum mechanics. It has the potential to solve problems that are impossible for traditional computers to handle, problems related to drug discovery, material science, and even breaking encryption codes.
Wow, that's mind-blowing. And Nvidia wants to be a part of this quantum computing revolution.
They do. They've even launched their own quantum computing platform called QDA to make it easier for developers to create quantum algorithms and applications.
That's impressive. They're really pushing the boundaries of technology. But all these ambitious R&D initiatives must cost a fortune.
They do, but their strong financial position allows them to invest heavily in research and development. They have a very healthy balance sheet with ample cash reserves and relatively low debt levels. As of January 2024, they had over $12 billion in cash and cash equivalents on hand, while their total debt was less than $10 billion.
That's a lot of financial firepower. It seems like they're in a good position to keep funding their R&D efforts and stay ahead of the game. But are there any potential downsides to having such a large cash reserve?
Some investors might argue that having too much cash on hand is a sign that a company isn't being aggressive enough in pursuing growth opportunities. They might prefer to see that cash being used for acquisitions, stock buybacks, or dividend payments.
So it's a balancing act. They need to have enough cash for their operations and R&D, but also be strategic about how they use that capital to maximize shareholder value.
Exactly. It's a decision that their management team needs to weigh carefully, and it's something that investors should pay attention to.
All right, let's switch gears one last time and talk about an aspect of investing that's become increasingly important to many: environmental, social, and governance factors, or ESG for short. How does Nvidia measure up in this area?
ESG is definitely becoming a bigger factor in investment decisions these days, and Nvidia seems to be recognizing that. They've been stepping up their ESG game in recent years, making a conscious effort to reduce their environmental impact, promote diversity and inclusion, and uphold high ethical standards.
That's good to hear. But what are they specifically doing to address these ESG concerns?
Well, as we mentioned earlier, they're on track to power their offices and data centers with 100% renewable electricity by 2025.
That's a significant step toward reducing their carbon footprint. It shows a commitment to addressing climate change.
Exactly, and it's something that many environmentally conscious investors are looking for.
What about their social impact? How are they promoting diversity and inclusion within their workforce?
They've been implementing several initiatives to increase the representation of women and minorities in their workforce.
And are those initiatives actually making a difference?
They seem to be moving in the right direction. It's an ongoing process, of course, but they're making progress.
And from a governance perspective, are they transparent and ethical in their business practices?
From what we've seen, yes. Their board of directors is independent and diverse, which is a good sign of strong governance. They also have a comprehensive code of conduct that outlines their expectations for all employees.
So they're ticking the boxes when it comes to ESG. They're aware of the importance of these factors and are taking steps to address them.
It's an ongoing process, of course, and there's always room for improvement, but they're definitely moving in the right direction.
Great. So we've covered a lot of ground about NVIDIA, their journey from graphics cards to AI and the metaverse, their financial performance, their commitment to R&D and ESG.
It's a fascinating company with a lot going for it.
But let's not forget about that elephant in the room,
Yeah.
competition.
Right, we've touched on it a bit, but it's worth diving deeper.
Okay, let's break down the competitive landscape. We talked about Intel and AMD, but I want to understand their specific strengths and weaknesses compared to NVIDIA.
Intel is a giant in the industry. They've been the dominant player in CPUs for decades.
So they know what they're doing.
Oh, they do. And they have a major advantage. They own and operate their own chip fabrication facilities, which gives them more control over their supply chain and potentially lowers their production costs.
That's a big advantage, especially with the global chip shortage we've seen in recent years.
It is. Now they're making a serious push into the GPU market, which is NVIDIA's stronghold. It's a direct challenge to NVIDIA's dominance.
So it's a battle of the titans. What about AMD? How do they stack up against NVIDIA?
AMD is another major player in the GPU market. They've been particularly successful in the gaming market, where they've been able to offer competitive products at lower prices.
For price competition is one of their key strategies.
Exactly. But they're also expanding into other areas like data centers and AI, where NVIDIA currently has a stronger position.
It sounds like NVIDIA has a technological edge in those areas, but Intel's manufacturing muscle and AMD's pricing strategy are putting pressure on them.
They are. It's a constant race to stay ahead.
But don't forget about those large internet companies developing their own chips.
Right. That's a growing threat that NVIDIA needs to take seriously.
What are the implications for NVIDIA if that trend continues?
It could potentially limit their growth in the data center market. If these internet giants can create chips that meet their specific needs, it could reduce their reliance on NVIDIA.
So NVIDIA needs to be on its toes and keep innovating.
They do. The competition is fierce, and it's coming from multiple directions.
Okay, so we've talked about the competitive pressures NVIDIA is facing. Now let's switch gears and talk about their growth opportunities. Despite the competition, are there areas where they can continue to expand and thrive?
Oh, absolutely. There are several promising growth opportunities on the horizon for NVIDIA.
Like what? What are some of the areas where they could really shine?
Well, as we've discussed, artificial intelligence is a major growth driver for NVIDIA. And that trend is only going to accelerate in the coming years. AI is becoming increasingly integrated into practically every industry imaginable, and NVIDIA is perfectly positioned to capitalize on this AI revolution.
It's amazing to think about how AI is transforming our world, and NVIDIA is right at the heart of it.
They are. They've got the hardware, the software, and the expertise to be a leader in this space.
What other growth opportunities are they pursuing?
The metaverse is another area where they see enormous potential. It's still early days, but the metaverse could fundamentally change how we interact with each other and with digital content. And NVIDIA is investing heavily in the technologies that will make this vision a reality.
So they're betting on a future where AI and the metaverse are ubiquitous.
They are, and it's a bet that could pay off big time.
But what about their more traditional markets, like gaming and professional visualization? Is there still room for growth there?
Absolutely. The gaming market is massive and continues to grow, and NVIDIA is a dominant player in this space. They're constantly pushing the boundaries with new graphics cards and technologies.
And as a gamer myself, I can attest to their commitment to delivering a top-notch gaming experience.
They're not neglecting their core market by any means, and the professional visualization market is also expected to grow steadily as industries become even more reliant on 3D modeling, simulation, and visualization tools.
So it sounds like NVIDIA has a diverse portfolio of businesses and a presence in multiple high-growth markets. But to capitalize on these opportunities, they need to execute effectively, right?
You're absolutely right. They need to keep investing in research and development, continue to innovate, build strong partnerships, and manage their supply chain effectively. It's a complex challenge, but it seems like they have the right ingredients for success.
They've certainly shown a knack for adapting and innovating in the past.
They have. But it's important to remember that nothing is guaranteed in the tech world. It's a fast-paced and constantly evolving landscape, and only time will tell if NVIDIA can maintain its impressive run.
Well said. All right, we've covered a lot of ground in this part of our deep dive. We've explored NVIDIA's evolution from a graphics card company to a major player in AI, data centers, and other key markets. We've delved into their financial performance, highlighting their impressive revenue growth and strong profitability. But we've also discussed the potential risks they face, including intense competition, supply chain vulnerabilities, and the cyclical nature of the semiconductor industry. And we've explored their research and development efforts, their foray into the metaverse, and their commitment to ESG principles. But there's still so much more to uncover.
Stay tuned for part 2, where we'll delve even deeper into the intricacies of NVIDIA's business and discuss their prospects for the future.
We'll analyze their competitive advantages, their strategic partnerships, and the potential risks and rewards for investors considering a stake in this tech titan.
We'll also explore the broader trends shaping the tech industry and how NVIDIA is positioning itself to navigate those changes.
Get ready for a fascinating journey into the world of cutting-edge technology, savvy business decisions, and the ever-evolving landscape of the semiconductor industry.
So we've covered a ton of ground about NVIDIA, but I bet what you're really wondering is, as a potential investor, should you buy their stock?
Right. It's the big question, the million-dollar question. And I wish we had a simple yes or no answer for you, but it's just not that straightforward.
Investing rarely is it? There's no magic 8-ball, unfortunately.
Nope. No crystal ball either.
But what we can do is arm you with information, with insights, to help you make a smart decision, a decision that aligns with your personal investment goals and your risk tolerance.
Exactly, because everyone's different. Some people are comfortable with a lot of risk, others prefer a more conservative approach. It's about finding what works for you.
Absolutely. NVIDIA, for example, is considered a growth stock. That usually means there's potential for high returns, but it also comes with higher risk.
It's like a high-stakes poker game.
Kind of. So if you're looking for a super stable, low-risk investment, NVIDIA might not be the right fit. But if you're comfortable with some risk and you see the potential for long-term growth, well, that's a different story.
Right. It all comes down to personal preference and aligning your investment strategy with your own risk tolerance. But let's say someone is comfortable with that higher risk. What else should they consider when evaluating NVIDIA as a potential investment?
Research. Due diligence is key.
Dig deep.
Exactly. Don't just take our word for it. Read their financial statements, check out analyst reports, stay up to date on industry news. The more information you have, the better equipped you'll be to make a sound decision.
Knowledge is power, as they say.
Okay.
Especially in the world of investing.
Absolutely. You've got to do your homework.
And speaking of financial details, their stock has performed really well in recent years, which often means a higher price-to-earnings ratio. What does that mean for potential investors?
That's a good point. A high price-to-earnings ratio, or PE ratio for short, basically means that investors are paying a premium for each dollar of earnings.
Because they're optimistic about future growth.
Precisely. They're betting that the company's earnings will continue to grow, justifying the higher price they're paying today. So it's crucial to analyze whether that current stock price is really justified based on the company's potential for future earnings.
So don't get caught up in the hype. Look at the fundamentals, the underlying value of the company.
Exactly. Don't just jump on the bandwagon because everyone else is. Make sure you understand what you're buying into.
So we've got risk tolerance, independent research, and careful valuation analysis. Anything else we should add to the checklist for potential NVIDIA investors?
Think big picture. Look at the broader trends shaping the tech world. The industry is constantly evolving, so ask yourself, will NVIDIA be able to adapt to new technologies and maintain their leadership position 5, 10 years down the line?
That's the million-dollar question. Can they stay ahead of the curve? No one has a crystal ball, but it's something potential investors need to ponder.
It is. The future is uncertain, but thinking critically about these long-term trends can help you make a more informed decision.
Okay, so to recap our advice for those considering an investment in NVIDIA, know your risk tolerance, do your homework, don't just follow the hype, and think long-term. Sound about right?
Spot on. And remember, we're not financial advisors, so don't take this as investment advice.
Right. Always consult with a financial professional before making any major investment decisions. But hopefully this discussion is giving you some food for thought.
Definitely. And if you're looking for more information, NVIDIA's investor relations website is a great resource.
It's a treasure trove of information. Dive in.
Speaking of things that are becoming more prominent for investors, what about those ESG factors, the environmental, social, and governance stuff?
Oh yeah, ESG. That's definitely top of mind for many investors these days. It's not just about financial returns anymore. Investors are also considering a company's impact on the world.
Right. They want to invest in companies that align with their values and that are making a positive contribution to society and the environment.
So how does NVIDIA fare in the ESG arena? Are they a leader, or do they have some catching up to do?
Well, they've been making progress, particularly in reducing their environmental impact. As we mentioned before, they're on track to power their offices and data centers with 100% renewable energy.
That's a big plus for environmentally conscious investors.
Yeah.
It shows a commitment to sustainability.
It does. They're also working to enhance their social impact. They've launched initiatives to increase diversity and inclusion in their workforce, not just at entry-level positions, but across all levels of the company.
That's great to hear. Diversity and inclusion are so important, not just for ethical reasons, but also for business success.
Exactly. A diverse workforce brings a wider range of perspectives and ideas, which can lead to better decision-making and innovation.
And from a governance perspective, are they transparent and ethical in their business practices?
From what we've seen, they're committed to strong corporate governance, their board of directors is independent and diverse, and they have a comprehensive code of conduct that outlines their expectations for all employees.
So they're ticking the boxes when it comes to ESG.
They seem to be. They're making progress on all fronts, environmental, social, and governance. But remember, it's an ongoing process, and there's always room for improvement.
Well said. No company is perfect.
Ah.
But it's encouraging to see that Nvidia is taking ESG seriously and making a conscious effort to do better.
It is, and it's something investors should definitely take into consideration.
Okay, let's turn our attention back to that competitive landscape for a moment. We talked about Intel and AMD, but I want to delve a bit deeper into the threat posed by those large internet companies developing their own chips.
That's a smart move. It's a trend that's not going away, and it has the potential to disrupt the entire semiconductor industry.
Why is that? What's driving these companies to develop their own chips?
It's about control, efficiency, and cost savings. These companies, think Google, Amazon, Microsoft, they have massive data centers that require enormous computing power. And they're realizing that they can potentially save money and improve performance by designing chips tailored to their specific needs.
So they're cutting out the middleman, so to speak.
Exactly. And that's a concern for Nvidia, because if these internet giants become less reliant on Nvidia's chips, it could impact Nvidia's revenue and market share, especially in the data center market, which has been a major growth engine for them.
So it's a double whammy.
It is. It's a development that Nvidia needs to watch closely and adapt to. They need to find ways to stay ahead of the curve and offer products and services that these internet companies can't easily replicate or replace.
It's like a constant arms race in the tech world.
It is. But let's shift gears a bit and talk about the positive side of things. Despite these competitive pressures, Nvidia still has a lot of growth opportunities.
Oh, yeah. We talked earlier about AI and the metaverse, but what else is on the horizon for them?
Well, artificial intelligence is still a massive opportunity for Nvidia. The demand for AI computing power is only going to increase in the coming years as AI becomes more integrated into every aspect of our lives.
AI is everywhere. It's like the electricity of the 21st century.
Exactly. And Nvidia is poised to be a major player in this AI-powered future.
They've got the hardware, the software, the expertise.
They do, and they're continuing to invest in AI research and development to stay at the forefront of this rapidly evolving field.
What about the metaverse? How big of an opportunity is that for Nvidia?
The metaverse is still a bit of a wild card, but the potential is enormous. It could fundamentally change how we work, play, socialize, and even learn. And Nvidia is betting big on this vision with their Omniverse platform.
They're building the tools to make the metaverse a reality.
They are. And it's not just about gaming and entertainment either. The metaverse has applications in all sorts of industries, from manufacturing and design to healthcare and education.
It's like the internet on steroids.
Cool.
Or maybe the internet on virtual reality headsets.
Exactly. It's a whole new world of possibilities, and Nvidia is right there at the forefront, exploring those possibilities and developing the technologies that will make them a reality.
So AI and the metaverse are two big bets for Nvidia. But what about their more established businesses like gaming and professional visualization? Do those markets still offer growth opportunities?
Absolutely. The gaming market is massive, and it shows no signs of slowing down. Nvidia is a dominant player in this market, and their commitment to innovation ensures they'll likely stay that way.
I can't imagine the gaming world without Nvidia.
It's hard to, isn't it? They've been such a driving force in pushing the boundaries of gaming graphics and performance. And the professional visualization market is also expected to continue growing, driven by industries that rely on high-performance graphics for things like 3D modeling, simulation, and animation.
So they've got a strong foundation in these established markets and are simultaneously venturing into new and exciting territories like AI and the metaverse.
They're definitely a company that's not afraid to embrace the future.
Now, we've talked a lot about Nvidia's core businesses and their growth prospects, but another factor that can influence a company's success is its strategic partnerships. Does Nvidia have a strong network of partners?
They do. Strategic partnerships are crucial in the tech industry, and NVIDIA has been very strategic in cultivating a diverse network of partners across various sectors.
What are some of their most important partnerships?
One key area is in the automotive industry. They've partnered with some of the biggest names in the business, companies like Mercedes-Benz, Audi, and Volvo.
So they're working directly with car manufacturers to develop those self-driving technologies we talked about earlier.
Exactly. They're not just supplying chips, they're actively collaborating with automakers to integrate their technology into vehicles and make autonomous driving a reality.
That's a smart move.
Ah,
Get in on the ground floor of a potentially transformative technology.
it is. And they've got other important partnerships in the data center and cloud computing space. They work closely with companies like Amazon Web Services, Microsoft Azure, and Google Cloud to optimize their platforms for AI and high-performance computing.
So they're embedding themselves in the infrastructure of the cloud, which is a pretty powerful position to be in.
It is. It gives them a significant reach and influence in a market that's only going to grow in the coming years.
But these partnerships aren't just about technology, are they? They're also about business strategy.
Absolutely. These partnerships help NVIDIA expand into new markets, accelerate the adoption of their technologies, and leverage the expertise and resources of their partners. It's a win-win situation for everyone involved.
It sounds like they've been very strategic in building their partnership ecosystem. But even with strong partners, Nvidia still faces risks, right?
Of course, no company is immune to risk. We've already discussed the competitive threats from Intel, AMD, and those large internet companies, but there are other risks to consider as well.
Like what? What else should investors be aware of?
One risk that's inherent in the semiconductor industry is its cyclical nature. Demand for chips can fluctuate wildly based on economic conditions, technological advancements, even geopolitical events.
So even if Nvidia is doing everything right, external factors could still impact their business.
Exactly. It's something that's largely outside their control, but it's something investors need to be aware of.
What other potential risks are on the radar?
Well, one that's specific to NVIDIA is their reliance on a single supplier for a key component of their GPUs.
So a single point of failure in their supply chain.
Exactly. It creates a potential vulnerability. If that supplier experiences any disruptions, it could impact NVIDIA's ability to manufacture their products. So diversification of their supply chain is something investors should keep an eye on.
Makes sense. It's always wise to spread the risk. But I'm sure Nvidia is aware of this risk and is likely taking steps to mitigate it.
I'm sure they are. Risk management is a critical part of any successful business, and NVIDIA has a very experienced and talented management team.
So they're probably already working on strategies to diversify their supply chain and reduce their reliance on that single supplier.
Most likely. They've shown a knack for being proactive and anticipating potential challenges.
Okay, we've talked about the competitive landscape, the importance of strategic partnerships, and some of the potential risks NVIDIA faces.
We've covered a lot of ground.
We have. But before we wrap up this section, I want to circle back to something we touched on earlier: sustainability.
Right. ESG. Investors are increasingly focused on a company's environmental and social impact.
And they're looking for companies that are taking concrete steps to address these issues. So how does NVIDIA stack up in this area?
Well, we've already mentioned their commitment to renewable energy and diversity and inclusion, but they've also implemented a number of other initiatives to reduce their environmental footprint and enhance their sustainability profile.
Like what? What else are they doing?
They've got energy efficiency programs, waste reduction efforts, and responsible sourcing practices. They're also working to promote diversity and inclusion throughout their supply chain, not just within their own operations.
So it's a holistic approach. They're thinking about sustainability from multiple angles.
They are. And that's important because investors are increasingly looking for companies that are taking a comprehensive approach to sustainability. It's becoming a key factor in investment decisions.
Right. It's not just a feel-good thing anymore. It's about making smart investments in companies that are well-positioned for the long term.
Exactly. And it seems like NVIDIA understands that. They're making a conscious effort to be a leader in sustainability, not just in the tech industry, but across the board.
That's great to hear. It's good for the planet and good for business.
It is. Sustainability is a win-win.
Okay, we've covered a lot of ground in this segment, from competitive pressures to strategic partnerships to sustainability.
It's been a deep dive into NVIDIA.
It has. But there's still more to explore. In part 3, we'll shift our focus to the future. We'll delve into the trends that are shaping the tech industry, how Nvidia is positioning itself to navigate those trends, and what it all means for potential investors.
We'll analyze their growth strategy, their research and development pipeline, and the challenges and opportunities that lie ahead for this tech titan.
Get ready for a fascinating journey into the world of cutting-edge technology and the companies that are leading the charge. All right, we spent the last two parts really dissecting Nvidia's present, their business segments, their financials, the whole competitive landscape, even their ESG efforts.
We've laid a solid foundation for understanding where they stand today.
Exactly. But now, it's time for the fun part. Looking ahead and exploring what the future might hold for Nvidia.
The crystal ball gazing, always a risky endeavor, especially in tech.
Oh, absolutely. Predicting the future in tech is like trying to hit a moving target. Things change so quickly.
It's a fast-paced world, that's for sure.
But based on what we know about Nvidia, their strengths, their strategic moves, the overall direction of the industry, I think we can make some educated guesses, right?
We can definitely try. And one trend that seems pretty safe to bet on is the continued growth of artificial intelligence.
AI's everywhere.
It is, and it's only going to become more pervasive in the coming years.
It's already transforming industries left and right. Healthcare, finance, transportation, manufacturing, you name it. AI is probably involved in some way.
And Nvidia is right in the thick of it, providing the hardware and software that's powering many of those AI advancements.
They were early to recognize the potential of AI, and they've positioned themselves strategically to be a leader in this space.
Exactly. They saw the wave coming and decided to ride it.
Another area where they seem to be placing a big bet is the metaverse. We talked about this in the previous segment.
Their investments in the metaverse are significant. They clearly see it as a major growth opportunity. Their Omniverse platform is a prime example of that commitment.
Right. Omniverse, that platform for collaboration and simulation in virtual worlds.
Exactly. It's already gaining traction in various industries, and it has the potential to be a game changer in how we design, create, and interact in virtual spaces.
It's like something out of a science fiction movie.
It is. But it's becoming more and more real every day, and Nvidia is at the forefront of making it happen.
So we've got AI and the metaverse. Two big bets for Nvidia. But they're also keeping an eye on other emerging technologies, right?
Oh, absolutely. They've got their finger on the pulse of what's next.
Like what? What's piqued their interest?
Well, quantum computing and edge computing are two areas they're actively exploring.
Quantum computing, huh? I have to admit, that one's a bit over my head.
It's pretty mind-boggling. Essentially, it's a completely different way of computing that harnesses the principles of quantum mechanics to solve problems that are currently impossible for traditional computers to handle.
Okay, I think I get the gist of it. It's a potential game changer, right?
It is. It could revolutionize fields like medicine, material science, and artificial intelligence. And edge computing is another exciting area. It's all about bringing computation and data storage closer to the source of the data, rather than relying on a centralized cloud.
So it's like decentralizing the internet.
In a way, yes. It's particularly important for applications that require real-time processing, like self-driving cars, robotics, and industrial automation.
So Nvidia is looking beyond its current successes, preparing for a future where these emerging technologies play a bigger role.
Exactly. They're not content with resting on their laurels. They're actively investing in research and development to stay ahead of the curve.
That's the sign of a truly innovative company, always looking ahead.
They're definitely not afraid to embrace the future.
But as exciting as all this sounds, there are always challenges ahead, right? No company, no matter how innovative or successful, is immune to challenges.
You're absolutely right. And for Nvidia, one of the biggest challenges they'll continue to face is competition. We've talked about Intel, AMD, and those internet giants developing their own chips.
It's a constant battle for market share and technological superiority.
Exactly. They need to constantly innovate and stay ahead of the curve to maintain their competitive edge.
And then there's the whole issue of the global supply chain for semiconductors, which, as we've seen in recent years, can be pretty volatile.
Oh yeah, that's a big one. Disruptions like pandemics, geopolitical tensions, even natural disasters can throw a wrench in the works.
And those are factors that are largely outside of Nvidia's control.
They are, but they can have a significant impact on their business, so it's something they need to be prepared for to have contingency plans in place.
So navigating these external pressures is a constant balancing act. They have to be adaptable and resilient.
They do, but it's not just about external challenges. They also face internal challenges, like the need to constantly attract and retain top talent.
Right. The war for talent in the tech industry is fierce.
It is. They need the best engineers, designers, researchers to stay ahead of the competition.
So it's a complex landscape with both opportunities and challenges.
It is. But NVIDIA has a lot going for it. They've got a strong track record of innovation, a solid financial foundation, and a clear vision for the future.
Okay, so we've painted this picture of a company with enormous potential, but also facing some serious challenges. As we wrap up this deep dive into NVIDIA, what's your overall assessment?
Well, I'd say NVIDIA is definitely a company to watch. They're a major player in some of the most exciting and transformative technologies of our time.
But is it a good investment? That's the question on everyone's mind, right?
It is. But unfortunately, there's no easy answer.
No crystal ball.
Nope. Ultimately, whether or not to invest in NVIDIA is a decision each individual needs to make based on their own investment goals, risk tolerance, and research.
We've given you the information, the insights. Now it's up to you to decide.
Exactly. We've tried to provide a balanced perspective, highlighting both the potential rewards and the potential risks.
We've explored their history, their present, and their potential future.
And we hope this deep dive has been helpful, that it's given you a better understanding of this fascinating company and its role in the ever-evolving world of technology.
We've had a blast exploring NVIDIA with you. It's been a wild ride.
It has. And remember, the world of tech is always changing, so stay curious, stay informed, and never stop learning.
That's great advice. And thanks for joining us on this deep dive.